Hey guys, what's up? Good to have you guys back. Today, I'm going to be teaching you guys about technical analysis. Listen, for you to be able to make money as a trader and for you to make correct, accurate trading decisions, you need to actually know a lot about technical analysis. Those lines you used to see on the charts, and people used to draw lines, you see a box or something, those are actually called technical analysis. And today, I'm going to be teaching you. For me, actually, it's a strategy called price action. And the reason why is because everything you see on the chart like this, they are all price movements. You understand? Price is going up, it's coming down. That's the reason why I use price action. And it has worked well for me over the years. There are different types of concepts. We have ICT, we have smart money concept, we have price action. Just like you are going to go and catch a fish, you understand? Some people use nets, while some use the normal fishing. They use fishing hook. Some use electrocution. These are like different ways to catch a fish, but the goal is to catch fish. So the goal is for us to like make money through Forex, and this is my own method, you understand? So it works for some people, it doesn't work for some people, but for me, it works for me very well, and I'm able to make a lot of millions over the years. So, first of all, before we start talking about price action, I want to tell you guys about candlestick. Our last class we spoke about candlestick, and I want to let you know that every single second, because okay, now if you look at the charts, you actually see a lot of all these things that's here. I've explained to you guys type of candlestick, the reversal, the doji, and so on and so forth. You guys know what wicks are, you know what the body of a candlestick is, so on and so forth. I want to let you guys know that every single second, the market creates a candle. Do you understand? And there are different time frames in the market which you can use to look at a candle. Currently, we're looking at GBP USD, that is the British pounds against the US dollars, and this is it in the 4 hours time frame. You understand? That means for every single candle you are seeing here, they represent 4 hours. That means before one of these candles can be made, it was 4 hours. Do you understand? Now, if we can go to 5 minutes time frame. You understand? What 5 minute time frame does it zooms into those candles and it gives you a graphical representation of what the market is doing every 5 minutes. You understand? You know, when you see a green or a blue candle, you know that okay, market is going up, and when you see a red candle, you know that the market is coming down. So all these things here are what? They are candles that are being formed every 5 minutes. Let me just explain to you in let me say in layman language so you guys can understand. So let us say my life, how much do I spend in a week? If you have to look at how much I spend in a week, let us say I just like look at a candlestick and look at how much I spend in a week. Let us say I spend 10,000 naira in a week. That would just be a big red candle in the market. Do you understand? But if you zoom in, you understand, you can now start seeing little candles, and that will be 7 days makes a week. So you can now start seeing different candles that let me say maybe on Monday I spent 2,000 naira, on Tuesday I spent 1,000 naira, on Wednesday I spent 500 naira. You understand? These are now little candles. Why? Because of you are looking at the expenses that I made weekly. Should I say weekly? No, daily. You're looking at the expenses that I made daily in a week. You understand? But if you have to look at how much I spent in a week, that's just 1 week, you just see one big candle. That's exactly what is going on right here. All these candles that you are seeing right now, all this one that you are seeing, this 5 minutes candle, if you look at it on the 30 minutes time frame, let me show you. You can see how the market went from year to year. Do you understand? The market went from year to year. But if I'm to change it to like 5 minutes time frame, you discover that the market will like open. It will make you see the market more clearly. Do you understand? And I can now see how little candles are. Do you understand? Now, if you look at the market in let's say 1 minute time frame, you understand? You now start seeing how how these little candles are made. Do you understand? So market actually like makes candles every single second, but you can decide the time frame in which you want to use to see the market. You understand? Let us say I spent I made 20,000 naira throughout the month. If you're looking at my expenses monthly, you just discover that you see one big green candle. Do you understand? But if you zoom into my life and you say, okay, let me see how Kelvin spends money daily. Now, even though it's is through a month, do you understand? You see that, okay, the money that I made 20,000 naira, you see all the little green candles that was able to like form that big candle, you understand? So in as much as you are seeing these candles now, there are little candles that actually make up each candles. Do you guys understand? So now, look at what I was showing you guys about the 30 minutes time frame. Look at how market went from here to here. Now, if you're looking at it on the 4 hours, you see. Now, on the 4 hour, you score that market just moved from here to here. Why? Because it is calculating it in 4 hours. If I'm to change this to daily also, all the 4 hours will like join together to like form one day, you understand? 4 hours will like to form one day, 4 hours will like join form one day, 4 hours will like form to join one day. But if I'm looking at a 4-hour candle, I want to like spread it out to like maybe 1 hour time frame, you understand? These are like different time frame here. I'm going to teach you guys how to use TradingView, MetaTrader, and so many other things during the course, so don't worry about it. So if I were to like look at market in 1 day, you see it's just one candle. That means market has like joined all the little candles together to like form this big candle, because you are trying to look at markets in a daily time frame. So that's what you guys need to understand about candlesticks and about time frame, because we're going to like talk so much about time frame. So let me change it back to like 4 hours, so I feel you guys already understand how the market. So if you look right here, you'll see that there's a timer, you understand? If you're looking at market in 4-hour time frame, there's a timer right here that is showing you when this candle is going to close in the next 4 hours. If we change it to like 5 minutes, you see that market, you start seeing markets smaller, and discover that market makes a candle every 5 minutes, you understand? Now look at that, means this candle was made in 5 minutes. You can see that there's a timer now. Look at it, a countdown that is making is actually like making, market is making a candle in every 5 minutes. As you guys can see, 5 minute time frame. So you can see this is 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now just watch. Discover that market just closed. You can see market closed this red candle and it has opened a new candle right now. And you can see there's a countdown of 5 minutes. That's exactly what market does, depending on the time frame that you're looking at market on. Good. So now let's move to technical analysis. We're going to be talking about trend lines. We're talking about higher highs and higher lows. So first of all, before we dive in, I want to let you guys know that market doesn't just go up in a straight line. Do you understand? Even though you want market to go up or market to come down, market always moves like this. Market always moves like this, you understand? Like I say, whatever goes up will surely come down. This is actually called a pullback. If market is going up like this, right, market must definitely come down. It's called a pullback. Do you understand? Before market keeps going. That this is actually a bullish trend. You understand? A bullish trend means up, a bearish trend means down. So let's go to the next. So this is actually called, this is if market is going on a downtrend. Okay. I still continue that. Yes, this is when market is going on a downtrend, you understand? This is actually called, so market goes down, it goes up, it's what? It pulls back, then it keeps going down. Just like what is going on in the market right now. Market is coming down, the market will pull back, it will go down, it will pull back, it will go down, it will pull back. Do you understand? So this is actually called a trend. You understand? There are two types of trend. No, there are two types of trend. We have the uptrend and we have the downtrend. I have another trend called the consolidating trend. I don't really know if it's called a trend, but it is actually a state whereby you can't really tell if market is going up or coming down. You understand? Market is like, it is in a straight line. You understand? It's in a straight line like this. Let me try to like put a line so you guys can like see it. It's in a straight line. You can't really tell if market is really going up or going down. I'll give you guys an example in the raw chart so you guys can like see an example. So this one, market is just like going up, coming down, going up and coming down. In this kind of state, it is best that you don't trade. Do you understand? You don't trade at all when market is acting like this. Why? Because you don't know the direction market wants to go. It's possible that market can continue this way and go up. It's possible that market can continue this way and come down. Do you understand? So, and this is actually called an uptrend. An uptrend, that is when you see people put something called a trend line so that they can identify the trend very, very well. Do you understand? This is actually called a trend line, or if market is going on a downtrend, we can put markets, you can do it like this, you understand? This is what they call a trend line. I'm going to like teach you guys everything, how to like draw these things and all in our coming videos. So this is what they call a uptrend, a downtrend, and this is what they call consolidation, you understand? Now, in an uptrend, there's something called the higher high and the higher low, you understand? This is an higher high and this is an higher low. Because market is going high, we have the highs and we have the lows of the market. Do you understand? Because market is going high. When market is going low, we have the lower high and we have the lower low. So this, at this point, this here is called the higher high. Is actually called HH. You understand? Oh, I don't know how to like draw very well with this. So this is actually called HH. It's actually called HH, higher high. Why this right here is called the higher low, HL. You understand? So when market goes up, this one here is now called a what? The market has formed a what? A new higher high. When market comes down again, it has formed a what? New higher low. When market goes up again, it has formed a new higher high. And when market comes down again, it has formed a new higher low. When market has gone up again, it has formed a new higher high. And when market comes down again, it has formed a new higher low. So I want you guys to like ensure that you get a writing material, which is actually like very, very important. You understand? So get a writing material. So let us move. So in this place here, when market is going down, this is actually called a lower high because it's still high. You understand? By this point in time, it is actually called a lower high. So we have LH. It is called a lower high. You understand? LH, a lower high, and here is called a lower low. Here is called a lower low. You understand? A lower high and a lower low. When market goes up again, market forms a new lower high, and when market comes down again, it forms a new lower low. Now, how for you to keep calling something an uptrend, you understand? Just like something like this. Markets, let me try to like remove all the joins that we did. So if you have a market like this, what are the criteria, you understand, in calling markets when you say market is going in an uptrend? How will you know market is going in an uptrend, you understand? Sometimes the market can be going in an uptrend and market can decide to like keep coming down, you understand? The market cannot keep going in an uptrend forever, you understand? The market cannot just keep going up forever. There's a state whereby markets will change from an uptrend to a downtrend. And market cannot just keep going low forever. There's a time whereby markets will like want to like change from going low to going high. And markets cannot keep consolidating. That means market cannot just keep going in a zigzag motion for a long time. Markets want to go up or to want to come down. So now, like I told you guys, when you have an uptrend like this, yeah, let me stop like this. So when you have an uptrend like this, how would you know the market is seeing an uptrend? When market breaks above the previous higher high, that is when you can call market an uptrend. You understand? You know, I told you that this place here is called an higher high, and here is called a what? Higher low. Don't forget. So when market goes above, markets must ensure that it breaks above this higher high until a new higher high is formed above the previous higher high. You cannot call it an uptrend. Do you understand? An higher high needs to be formed. Do you understand? It does not mean that market has to like always move in this fine pattern. Sometimes the market will go like this, market will go up, market can come all the way down, and market can still go up again, come down, continue like this. Do you understand? Now time market comes down, still goes up, but the fact that a new higher high is formed, that means market is still surpassing the previous high, something like this. At this point, you can discover that market actually an higher high was formed. Do you understand? At some point also, market did what? Yeah. A new higher high was formed. That means this new higher high was formed. You can see market is moving in a what? Uptrend. At this point also, this is an higher high. Market pulled back. It went up again. Market pulled back. Even though it came down here, it still went above. You understand? Market pulled back. The fact that it is going above, you can say market is in an uptrend. You understand? Don't forget, anytime a new higher high breaks the previous higher high, market is in an uptrend. But if you discover that, okay, maybe let us imagine market is actually moving this way. Markets went up, came down, the market is like this. Now, you cannot call this market an uptrend anymore. Now, it is an uptrend there because a new higher high was formed. But this, at this point, market failed to what? To break above this higher high. At this point in time, you can see, okay, maybe market wants to start going down or market wants to what? Consolidate. This is an example of a consolidating market. Do you understand? So, you can see market went up, came down, failed to break above this higher high. So what? Market what? Was consolidating, or market wants to change direction. I'm going to like explain that further in our let me say in the next video. But at this point, you guys can see that what? Market is no more what? Is no more going in an uptrend anymore. Now, let me give you an example also. Let me give you an example of a downtrend. So we have markets do like this. Mind my, I don't really know how to draw. And I know how to do this to read the chart very well and make money. Okay, so now let's continue. So at this point, right, you can see that market went up, it came down, market pulled back. The fact that market is breaking below the previous low. Now, okay, I told you guys this is an higher high and this is a what? A lower low. The fact that market is what? Is going below the previous lower low, you can call market a downtrend. Don't forget, the fact that market can go below the previous lower low, you can say market is in a what? In a downtrend. So this is a what? This is an higher low right here, like I told you guys. This is a what? A lower low. So market pulled back, came down again. It came down below the what? The previous lower low. Do you understand? Let me draw it for you guys so you guys can see it very clearly. So this was the previous lower low. Do you understand? This was the lower low here. So market pulled back, came below the previous lower low. At this point, you can say, okay, market is what? Is in a downtrend. Do you understand? So market pulled back again. It went up. It came down again. You understand? Forming a new lower low. Do you understand? So at this point in time, you can see that market is in a what? Market is in a trend line. Anytime market fails to go below a lower low, you can say that market is no more in a downtrend. Okay, now you guys can see that the market is like moving here. Markets, this is like a practical example of what's happening in the live market. This is actually live. So market went down, market went up, it went down again, it went up, market went down, went up, market went down to create a lower low, but it was not able to break below this previous low. Do you understand? Market was not able to break above this previous low. At any point in time, you can now say, oh, look like market wants to change character, or it wants to change direction, or it wants to what? Move to the upside. You understand? So you can be expecting market to what? To buy from this point or to keep selling, but there are other confirmations you need before you'll be able to say, okay, maybe market wants to buy, or market wants to sell, or market want to do this or do that. But you guys need to understand the foundation now. Are you getting me? So the fact that market doesn't break the previous low, market is not moving in a what? In a downtrend. So let me give you an example again. So market is going, okay. So market went down, market went up, market went down. It shows that market is in a downtrend, like I told you. Market went up, and market did not break this low anymore. The market started doing like this. You understand? The market went up. At this point in time, you cannot say market is in a downtrend anymore. Why? Because this is a what? A lower low, a lower low. But at this point in time, market did not what? Market did not break below. You understand? At this point in time, you can say, okay, maybe market wants to consolidate or wants to like move up. So that is that. Let me give you guys an example from the charts. This is GBP USD. So we're going to like change to like 4 hours time frame. And let me see if I can give you guys a practical example in the markets. In the market. So what is going on right now? Now, just like I told you guys, just follow me right now. So what did markets do? Markets from here market went down. Do you understand? Market went up. Market went down. Are you following me? Market went up. At this point in time, market is supposed to what? To go down again, breaking, because at this point in time, this was a lower low. But this lower low actually broke, this one here, broke the previous one. So market was supposed to what? Break below this previous lower low. Before you can say market is going in a what? In a downtrend. But what did market do? Market changed. So you cannot say market is in a what? Is in a downtrend anymore. Market wants to what? Market wants to move down, move up. So when you discover that market is unable to break below the lower low, the next thing we are expecting is what? Is an uptrend. Let me give you guys another example. Let me see if I can. Okay, let me remove this. Let me remove this. Hey. So let me delete that. So that was a downtrend. Let me look for an uptrend. Let me look for an uptrend. Let me look for an uptrend for you guys. Okay, this is a practical one. So just follow me, follow me, follow me. So at this point in time, market was actually going up. Market went up, right? Market came down. Market went up again. Market was supposed to what? Come down here, maybe, then go up and do what? It's supposed to break the what? The previous high, the previous higher high. Before you say market wants to like go up, what did market do? Market came down. At this point in time, market is no more in an what? In an uptrend. What market doing? Market has changed to a downtrend. And I'm going to teach you guys how to even spot, how you will know that, oh, market wants to like go down or market wants to go up. There are different confirmations, and I'm going to like teaching you guys everything. So don't you worry. So that's that. Now that you guys understand what trend line means, you know what higher highs are, you know what higher lows are, and that's the reason why people put lines in the market so that they can understand a trend. Do you understand? Because there are many people, they don't really know how to identify a trend on the market. So they use what they call trend lines so that they can see it very, very well. Do you understand? Like looking at this market right now, what are you going to do? You're going to like put trend lines. A trend line is very sure when you have 3 confirmations. Do you understand? Because of you have 2 confirmations doesn't mean that you can put a trend line. What do I mean by confirmations? Now, let's just say 3 touches. I don't know when we were in school, a graph. They'll tell you before you can draw a line on your graph, you must have, is it coordinator? What do they call those things? You must have about 3 of them. That means market must be touching it more than 3. That means they must be more than, let's say, 3 or 4, 3 or more candles. You understand? Before you can draw a trend line. That means, what do I mean by candles? Like, look at it. On this trend line, how many touches do we have? We have 1, we have 2, we have 3, we have 4, we have 5. That means this is a what? Is a solid trend. Do you understand? Let me see. Let me show you guys again. So at this point, you can draw a trend line like this. You can draw a trend line like this. Why can't you draw it like this? No, you can't draw it like this here. Because we have what? We have 3 touching. We have 1, we have 2, we have 3. Now, let me give you guys an example of why you should never use 2. Now, let us imagine that let's imagine that all these things here, market has not moved. Let's imagine that market was not moved, and the only thing that we could see was maybe at this point in time, market was like at this point. Do you understand? Market was at this point. Let me try to see if I can use my replay tool. Okay. So now I want you guys to watch. Now let us imagine that market was actually like this. Do you understand? We don't really know what is going to happen in the market anymore. So market went up, came down, went up. You now drew a trend line. Because of you drew a trend line and you thought that, oh, because of market went up and came down, went up, what market going to do again? Market will just like keep selling. You understand? Why? Because you feel like you've drawn a trend line. And I told you guys, you need 3 touches. At least the trend line needs to touch 3 candlesticks before you can say it's a strong trend. You understand? What did market do? Let me play it. What did market do? And you guys, you're expecting market to keep selling. What did market do? Market to what? You can see that. Okay, let me stop it. You can see that. What did market do? Your trend went up, came down. Market broke above your trend line. Do you understand? Markets went above your trend line. Why? Because this is not really a strong trend because it's just 2. But when you have 3 or more, you can call it a strong trend. Do you understand? So let us see. Let me remove this. Yes, I want to remove the play mode. So let me give you an example. Take a look at this right now. Take a look at this trend. And put a trend line right here. A trend line is just a line used to see the markets very well. Do you understand? Now take a look at this. How many trends does it have? It has 1, it has 2, it has 3, 4, 5. You understand? This is a solid trend. At this point in time, we are so sure that markets will, at a point, markets will definitely come down here to touch this line. That means if I was to enter into a trade, I'm going to like be selling at this very top, and I'm going to be expecting market to like come down here and touch this trend line. You understand why? Because market is moving in a what? In an up trend. You understand? Went up, came down, went up. I told you, what did I tell you? A trend is, it must break your higher high. Market went up here, came down, went up here, came down, broke your what? Your previous higher high. Do you understand? If you cannot see it, just watch it. Market went up, you understand? Came down here, went up again, came down here, went up again, breaking your what? Your previous higher high. Came down here, went up again, even though it's not so high. You know that market what? Broke above your what? Your previous higher high. And we're expecting market to like come down here. Every time we can enter a sell and we can expect to like remove our profits or take our profits when market comes to this side. Do you understand? Good. So let me remove this. So now you guys now understand everything about what? Higher highs, higher lows, trends, and so many other things. There's something called area of value, support, and resistance. This is actually very, 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 very important when you're using price action. You understand? Yes, there's trend, but you saw that it's not every time that market always follows the trend line. You understand? Because of your drawing, wherever you are, because you are just drawing a line, doesn't mean that markets will just come and meet that particular line. Do you understand? Well, there's something called support and resistance. All these things you are seeing here are prices. They are prices of what? The price of the Great British Pounds against the US dollars. You can see all these things here are price. And all these things are what? They are indicating the price of the market. So now, what is support and resistance? Just like the name is, support means something that you can rest on. This is actually a support. Why? Because I can rest my body on it. You understand? And the ceiling or your ceiling above you is a resistance because you cannot go above it. That is exactly what it is in trading. And once you can understand support and resistance, trust me, your trading journey will be on the upside. You understand? You start getting better at it. Now, what's support and resistance? Let me put a line. You can put a line or you can use a box. You understand? Because lines are not really important because market doesn't just like come to a particular line. When I mean it comes to a particular line, doesn't mean that market should just come here because of this line and just like go on. You can actually use a box. It's called a region. Do you understand? There are sometimes that market can be so close. Market can pass the line. Market might not even touch the line. And market should not even like, okay, that means if you can see at the point that market pass the line, this one here, market passed the line a bit. This one market was like spot on the line. At the point in time, market passed the line a bit before it went up. So, sorry. Let me delete this. So, you can use a box like this. Because this place is a... Now, yes, you can use it like this. So, you can know that anytime market is coming here, market can react to this place. Now, I've not really explained to you guys what support and resistance is. Now, just like as you have bus stops, wherever you are watching from, there are bus stops. You are going from one place to another. There's a place that when you go, you definitely stop. You understand? Even though you are not, that's not your destination. There's some places that maybe you are taking a public transport or something, even a train or something. When you are moving from that particular place to another place, there's sometimes the market might, the bus might actually stop at some particular places to drop some passengers. Good. So when market is coming down or is going up, there are some places in the market that market always reacts to. Let me see, it always stops there. It plays a little bit before market keeps going down. Do you understand? Just like, okay, so now, this is actually a support. Now, what does market do when market gets to a support? Sometimes market actually stops at the support, then it bounce up. You understand? I mean, your market is like a bus stop. You understand? Started its destination, just like this. Market was coming here. From here, market sold. It came to this support. It went up again. Came down, came to this support, went up all the way here, came down, came to this support, went all the way here, came down to this support, and what did the market do? Market broke below the support. Now, if you were to trade, you understand, and you were to enter or you were to take your trade from here, that's the question a lot of people used to ask. How will I know when to close my trade? Because some people, when they start making money when they start saying that they are on profit on their trading account, they don't really know where to close. They don't really know where the market is going to get to. That's what that's where support and resistance comes into play. You understand? Now, you can use support and resistance to take profits. That means you can use support and resistance to like close your profits, and you can use support and resistance to know when to enter into a trade. Do you understand? So, looking at this is actually a support. Why? Because market was supporting, because market was not able to break below. That's what the support is. Market was not able to break below that particular place. When market came down here, market was not able to come down. What did market do? It went up. This place is a what? Is a support. So we use this line. You know, I was going to put this line here. We use this line to like identify it, or use a box, use a region to just like identify that particular place in the line. What is the price of this place? This place is 1.2437. It's a key level in the market. You understand? That doesn't mean that you should go and copy this place and say this place is a very key level here. You can actually spot it on when you see it yourself in the market. So we have markets come down here, went up, came again to this place. You understand? That means if I was to enter inside the market, maybe at this point in time, market came down to this place, went up, and I was to enter for a sell here, I will know that when market comes down to this place, I am to remove my money or I'm to leave the trade. Why? Because I know that this place is a support. I know how when market gets to this place, market will not keep selling down. Market may not keep selling down, but market to what? I remove my money and I expect market to like go up again. Hopefully, I'll be expecting to like enter into the trade again for market to what? Come down to that particular support. So let's say I was to enter for a sell here. I'll know, okay, if market is to sell, market will sell, and when market comes to this support, I'll remove my money. I mean, if I was to enter into anywhere, I'll be looking forward to what? To my support. There are multiple levels of support in the market. You understand? Because I drew this doesn't mean that's not the only support. That's the only support in the market. So this place can also serve as multiple places in the market can also serve as a support and as a resistance also. A support can actually turn to a resistance, and a resistance can actually turn to a support. Now, what do I mean by resistance? Now, I want you to watch. I don't know, you cannot really use a line to actually pick, to actually say market is like you cannot use a line to accurately spot a resistance. Do you understand? You use a box, but because of I want my chart to be clear and so I can like teach you guys very well, yeah, you can actually draw it like this. So when market came into this region, market played a bit before market started like going down. So I'm going to like remove it. So what did market do? So at the point in time, market went up. This resistance, this place here, did not allow market to go above. Market came down. Are you guys following? Let me go to the past. Okay, it's my network. Okay, let me move this up a bit so you guys can see. Now you look at these regions. Anytime market comes above, comes to these places, it's called that market will not be able to what? To go up anymore. I mean, market came down, went up. It was not able to like go up anymore. Market started coming down. Also, this place also, market came up, came down, came to this top also. It came down here, came to this up also. It was not able to go above. You can say market is a what? This is actually what? A resistance. Came down here, market broke above, played for a bit, came down to this what? To this support. What does support do? It bounced up. That means if I was to trade this kind of market, I'll enter into a sell here, expect market to come down here, remove my money, expect market to like maybe go up again, do you understand, then come down. Do you understand? So that's what they call support and resistance. Let me try to like change it to like the 30 minutes time frame so I can like give you guys more accurate examples of support and resistance. So looking at the market here, just mind me, I'm trying to like teach you guys live chat so you guys can understand. You understand? I don't want to like edit anything, I don't want to cut anything, so you guys can see how I actually analyze the market, which will help you very well. Now let me tell you something. Mentorship is actually very, very important. Do you understand? For you to be able to like have somebody that actually like teaches you something is actually one of the fastest way for you to learn. Let me tell you, listen, Forex is not a get-rich scheme. I always say this, you understand? I lost a lot of money when I started trading, you understand? Because I really didn't have a mentor at that point in time. But what did I just keep doing? I just kept on learning from different places. I kept watching YouTube videos. I wanted to like know why the market is moving this way, what moves the market, what's the right strategy for me to use, what's the right concept, and so on and so forth. So, looking at this place, let me use the box like I always do. So at this point in time, at this point in time, I told you this is a what? Resistance. This is a resistance. Market broke above the resistance a bit. Market came down here to this support. How can you spot a support? 3 or more. It has to have 3 or more touches. You understand? 3 or more touches. If we extend this a bit, you see market was touching here, market was touching here, market was touching here. Market came here, reacted to this side, and market started what? Going up. Market touched here and started going up. That's what they call support and resistance. You can spot support and resistance in any time frame. Now, the bigger the time frame, the better for you. Do you understand? That means the higher the time frame you are using to trade, the more accurate it will be. If you are trading the 1 minute time frame, markets will not be so accurate. And for us to be able to make an accurate or a correct market decision, for you to be able to say, okay, if market is going to like sell or buy, it's going to be very hard. But once you are able to trade in the daily time frame or in the 4 hours time frame, market is actually more accurate then. Okay, let me give you an example about my own life so you guys can like understand what I am trying to say. Let me move all these joints. So let us say from Monday, let's say January to March. Let's say January to March. I always spend 50,000 naira monthly. You understand? Let us say give or take, I must spend more than 50,000 naira from like every month. During January, I spent 50,000 naira. February, I spent 50,000 naira. March, I spent 50,000 naira. Do you understand? Now, there's an high probability that I'm going to spend more than 50,000 naira or even 50,000 naira in April. Why? Because there's enough time for me to there's enough time for me to be able to like spend that amount of money. Why? Because it's 30 days. But if you are trying to say, oh, maybe every day, maybe on Monday, Kelvin spent maybe 15 naira, on Tuesday, Kelvin spent 15 naira, it's possible that on Sunday, I might not spend 15 naira because you are not so sure. Now you're trying to like give a guess. That's exactly how the market is. Changing the 4 hours time frame, this is actually a very accurate, you can actually predict the market, right? Because there's so much time for market to like do whatever thing that it actually was to do. Now for you to be trading maybe 1 minute time frame or the 5 minute time frame, why is it not really good for you to like trade those little time frame? At the beginning of this Forex class, I told you guys the different types of traders. We have the scalpers, we have the day traders, we have the swing traders, and so on and so forth. Do you understand? Scalpers trade 5 minute time frame. You just want the market to just move up a little bit, and they're out. Or they want market to like sell a little bit and they're out. Day traders like me, I'm expecting to see maybe 20 pips, 30 pips, and so on and so on. I'm going to like explain to you guys what I've explained to you what pips is, but I'm going to like give you an example very soon, so you guys will see when the market is going down or is going up. I'm going to like place a trade for you guys so you guys can like understand everything about Forex. So now, like I said, why swing traders? Swing traders are traders that will like leave the market for weeks, sometimes months. Do you understand? So when you are actually trading the 4 hours time frame, all these candles here are very, very accurate. You cannot really manipulate a 4 hour candle. or if let's say this time frame, it's very hard for you to manipulate it. But 1 minute time frame, 30 seconds time frame, you don't really know what is going to happen in the markets. There's something called news events, which can make the market go up very well, or sorry, can go up very fast or can come down very fast. You understand? So when you're trying to trade those time frames, manipulation can happen and many things can happen. Do you understand? But the 4 hours time frame like this, manipulation is actually like very limited, and it's actually very accurate for you to be able to trade it. So now when I'm talking about price action, what am I talking about? I'm basically talking about support and resistance. I'm talking about trend line, and I'm talking about candlestick. So if I was to enter into a trade, where will I enter into a trade? What will I see? You understand? At any point in time, you guys have understood, you've learned a lot in this. You've learned about what? The higher highs and higher lows, about what trends, uptrend, downtrend, consolidating. You've learned about support and resistance. Support is a particular level in the market where market fails to break below, while resistance is a particular point in the market, or is a region in the market where market fails to break above. And candlestick, when you see candlesticks like this long wick, it means the market wants to like change direction. The market wants to go up or go down. So when we join all these things together, we now start saying price action. And this is my kind of strategy. See, let me show you. All these things before I didn't know about it. So now, let us imagine I was to get into this trade currently. First of all, I put my trend line. I have to understand first what trend, what is market doing. Do you understand? Is market going up or market is going down? You understand? You might be able to see it, but when you put a trend line like this, you are able to see it even well. Some people put just one trend line like this, while some put double. You understand? Just for them to be able to like see it very well. You understand? That sometimes you put double, sometimes you put one, so on and so forth like that. So this is actually like a what? Let me put that correctly. Do you understand? This is actually what a trend line. Market went up, came down, went up, came down. Market failed to like touch this place here, and that's when support and resistance come in. I point out the next thing for you to identify is what? Where is your support? Where is your resistance? You understand? I point out we're going to use a line. Let's put this line here. Do you understand? Now you can understand this is a support and this is a very key level. This line, yeah. It's a very key level. Why? Because when markets went up at this point, you can see how markets reacted here. This was the resistance for markets. It came down here, went up, came down. Now, this thing that was the resistance for the market here was not actually a support here. You know, I told you that markets can become a region in the markets can turn to a support, can turn to a resistance, and a resistance can turn to a support. You understand? Because these are key levels in the market. You understand? And markets always tends to touch a support or a resistance because they are a very what they are key levels. Okay, so went up, came down, went up, came down. Market went up again, broke below. You understand? Played a bit here, came back to this what place. Now, what is it acting as? It's not acting as a support now. It's acting as a resistance. Market failed to break above this place. Market came down here. At this point, it went up. It didn't break above this place. It came down here, went up. It couldn't break below. Went up, came down. Market couldn't like break below, and market went up again. This is a very important place. It's a very important place in the market. So now you've identified here. Again, you have to identify your next. You have to identify more support and resistance in the market. You understand? Why? Because market reacted here, reacted here, reacted here, reacted here. If you go back in the past, you scroll down. Market has also reacted here also. Do you understand? Now, that doesn't mean you should fill your charts with different lines that just pull lines and lines and lines and lines. No. You have to look at when markets reacted to the most. Now, if I was to enter into this trade and I was to make profits, what will I do? Now, at this point, when market went up, came down, market went up again to this point, I would have spotted this place. Imagine that from here. Let us imagine that. Okay, let me use my replay tool. Let's imagine. Okay, let us imagine now. Now I've cut those places out. Let us imagine now that market is going up. Do you understand? When will I enter inside my sale? When will I buy? When will I sell? Do you understand? Now, because I know that markets, this is the key level in the market. Do you understand? And market has like bounced down from here. Now this place is the resistance. And market is going up. At this point in time, I will enter for a sale at this place. There are more confirmations I'll tell you about in the future, you understand? But because of your knowledge, I'm just trying to like place a trade based on your knowledge. So what I'm going to do, I'm going to enter for a sale. Why? What are my confirmations? Number one, market is on a what? It's on an uptrend, you understand? Whatever goes up might come down. Market must always have pullbacks, you understand? So after market has gone up, we're expecting market to like pull back a little bit, and you can trade the pullback. You understand? You can trade the pullback, you can short for a little bit before you can go long again. So at that point in time, why am I entering? Why? Because of this what? This place here. Do you understand? So we are entering in for a what? For a sale. We're entering for a sale. That means if I'm selling here, where am I expected to leave my trade to? When am I expected to remove my profit? Your what? Your what? Your support. That's this place that is down. Do you understand? We're expecting market to do what? We're expecting market from this top, we're expecting market to what? To sell to this point. And when market sells to this point, because market is moving in an uptrend, we can expect market to do what again? We can expect market to what? To buy. Do you understand? Now, let me delete all these things and let us see what market did in the market. I always use the word market a lot. Market, see what market did in the market. So, what did market do? Market came down. Do you understand? From here, market came down here, gave us money. Then from here, actually, I will enter a buy because market is moving in an uptrend. We're going to buy. And where are we going to move our money? Support and resistance. The bus stop. Some can actually leave the market to go above. Because why? Because here also is a key level because the market has come to this place before. So market can still come to this same place again. Do you guys understand? So yes, there you have it. You've learned about price action using what? Candlestick. That is what? This candles, because you guys have learned about it before. Rejecting candle. Anytime you see candlestick size with long wicks, no market wants to like change direction. Not almost every time, but most of the times when you see long wicks like this, market wants to like change direction because market at this point was like going up. Market was going up before. There was this rejection here, like this long wick here. Market started coming down. Do you understand? You can see that there's a long wick right here. Market was coming down before. You can see this rejection here. Market started going up. So when you put this rejection, you put this trend line, you put support and resistance together, you form a strong technical analysis. Then you can now what? Place a trade. You can now buy, you can now sell, you can now know when to remove your money because you've like spotted a support and resistance. There are other key levels in this market. Do you understand? You can draw so many support and resistance. Trust me, you understand? It doesn't mean it has to be two or it has to be one. You can draw so many. Market reacts to different levels. You can see this is support and resistance also. You can see market reacted here, market reacted here, market reacted here, market came here, market reacted here, market reacted here. So you can draw a lot of support and resistance and you can enter inside, you can buy from here. When it gets here, you can close your trade, you understand? And that is how that is how we analyze the market. So now you've learned a lot about technical analysis. In the next class, I'm going to be teaching you guys about market structure and so on and so forth. Trust me, guys, you are on the right path, and with me, you are going to learn so much. Thank you, guys. Don't forget to like jot down things, or if you don't understand anything, just watch the video again. See you guys later. Peace.